Hey everybody, welcome to this episode of Finance This, Property That. It is designed to educate and empower financial legacies for generations. We provide you with education from both my experience in the field of finance and property, and we bring in guest speakers who are experts in their sector of the finance and property fields. Today, really have a great guest on. Love to introduce him today. Is Jonathan Betros, Director and Lead Buyers Agent from the Buyers Squad. Thank you for joining me today. I really appreciate it. Know you're busy. But look, I just want to obviously get to know you. Obviously, I know you, but the audience to know you a little bit better.
Yep.
Mate, you just became a dad.
It's true.
Like,
almost 6 months ago now. Yeah.
Oh, geez. Yeah. How's Milo? How's Caitlin?
He's good. Not a lot of sleep, obviously, but Caitlin's probably taking the brunt of that. But he's great. He's a happy little guy. He's just constantly laughing and smiling and growing, developing. He's awesome. So it's pretty awesome being a dad. The first 6 months have been a bit all over the shop, trying to balance new business and becoming a dad. But it's been great.
Well, how was the first Christmas?
It was also hectic because Caitlin's family were up with us as well, and so we had people everywhere. But it was actually really good. We all got dressed up in matching, Christmas suits and everything. So
yeah, I saw that on your Facebook, Instagram. That was pretty cute.
But it was good. It was really good, and he's loving life, which is the main thing. So he's happy.
Yeah, you mentioned that how you're juggling the work, life, family, and spending enough time, how you're managing all that.
Yeah, look, it is a balance, obviously, but getting and starting your own business was, part of the reason I did that was to make sure I was able to actually spend time with family. And obviously knew that we're pregnant, going to be having a baby towards the back end of last year, so it was in September. The whole point was that I could kind of run my own ship and kind of pick and choose where I work and have work from home, spend time with family, all that kind of stuff. So it was it was part of the reason actually why I decided to start the business in the first place. It's definitely a balance because, as a business owner, you're kind of doing everything the whole way through. So it's fun, but definitely challenging at times.
Yeah, mate, I could tell you it does get easier but not for a while. And then it gets hard again. My daughter's 11. Well, she's 11 this Saturday.
Right.
So we're...
Birthday parties on?
Yeah, birthday parties. And then we've got band camps and things like that as well. Right. So it gets easier, but then it's just different easy.
Yep.
So, you've got a lot to look forward to.
She can look after herself now, but...
Maybe. I don't trust her cooking.
Not true.
Not yet. But she's learning. She likes to get in the kitchen, which is great.
That's good.
You mentioned like one of your motivations was family and being able to be there for them more.
Yeah.
What other things motivated you to become a buyer's agent and actually start the Buyers Squad?
Yeah, look, I think the big thing for me was about delivering the right level of service and experience for clients as well. So, I worked in a few different places where, I think the focus may not have necessarily been right. And I kind of went through the process and I can actually do this, I feel better, but it's about focusing on the client and always doing the right thing by the client. And so the motivation behind that was to actually create a business that focused on that, flip the process on its head a little bit, and actually look strategically at clients and what we should be delivering for them. So that was kind of the bigger driver behind it, was looking at the market landscape and going, oh yeah, cool, I can see a gap in that. And that, doing the right thing by the client, focusing on them, delivering a strategic outcome for them that is the right thing by them at every step of the way. That was probably the bigger driver behind it.
Good. We are going to get into how you do things in a second, talking through all the words that are associated with your industry. But I guess, looking at buyer's agents, there's, buyer's agents, buyer's advocates, things like that. When I speak to clients, they know some things about buyer's agent, but then they always say, oh, they never worked, but, maybe it's a relationship piece. Mate, in a real easy snapshot, can you just tell me what does a buyer's agent do
Yep.
And how can they add value?
Yeah, cool. So there probably is a few misconceptions around buyer's agents and buyer's advocates and what we do. And probably the big one is that it's for the top end of town. You know, if you've got millions of dollars to spend and, you know, the high-end professionals. But from the clients that we work with, we actually work majority with clients that have lower budgets. We generally don't work with that many clients over $2 million anyway. So I think that's probably a big misconception is people think that buyers advocates are only for the real top end prestige part of the market. So look, what we do is essentially help buyers and we're the advocate for the buyer. So selling agents have always been around and they are working on behalf of and always on behalf of the seller. And so again, buyer's agents, we're on the opposite end of that, and we represent the buyer and look after the buyer's best interest the whole way through the process. So, and it really is from start to finish. So sitting down, looking at the strategic approach, what they're looking for, get their brief in, understand what property they want, what their longer term goals look like, taking through each step of the buying process and being their advocate and working on behalf of them the whole way through.
Yeah, and I mean, I've worked with a lot of buyers agents in the past, and you know, I think the biggest value that I can see from the clients that I deal with is time, knowledge, expertise, but also the negotiation part of it, because at the end of the day, you guys are in the market, right?
Yeah.
you know, you've got that rapport, you've got that relationship with the real estate agents, and you know, you understand how they work as well. And you know, you're talking about budgets and things like that. Well, I always feel that if you're a time poor professional or you're time poor in general, paying that little bit extra and then having someone doing the negotiations for you and saving you that money anyway makes sense. In my head, it does anyway.
Yeah, for sure. And I think, you know, we always tell our clients as well that we will generally save them our fee, if not more, through the process. And that current market may not necessarily mean that we're going to save a huge amount or from a discounting perspective, but it will definitely mean that we'll stop them from overpaying on a property. And the big piece to that obviously is the right research in the back end and knowing what the value of the property is worth. And there's a bunch of different factors that really drive what a property is worth. But doing the right research, looking at the comparables in the market, knowing what that property is worth to make sure the client's never overpaying. And you talk about the value proposition, to your point, saving time, money and energy through the process are kind of the big ones, because we do all that back-end research. We'll do all the heavy lifting for the client through the process as well. So that could be research, sourcing properties, it could be going to inspections on their behalf, negotiation with the agents, all the way through to settlement. The other thing that we probably don't touch on enough is the due diligence part of it. So the protection for the client, for the buyer, that there is no issues with the property. And that could be things like flood zones, fire zones, easements on the property, doing a building and pest inspection once you've got a contract in place to make sure there's no issues with the actual building itself. And essentially protecting the buyer through each of those stages of the process. One, with the property. Secondly, you know, with the price and making sure they're not getting stabbed with in paying more than they should. We always guarantee the client that they'll get the best possible price in market. And then, just the protection pieces throughout and connecting with other partners as well. So for the likes of, you know, the mortgage broking side of things where they need help with the finance, we'd link in with someone like you to make sure they're getting the best possible deal in market from a finance perspective. We've got conveyancers, you know, if it's an investment property, we've got property managers, you know, people that can help with depreciation reports, like all of the squad, lack of a better term, that they need. We can introduce them through the process, so everything's kind of covered.
And that's really important to have that team. I talk to my clients as well about have the team around you with the skills, knowledge, and expertise to get your goals. That's the whole idea, right? You touched on what you do as a buyer's agent. It's very similar to what I do as a mortgage broker, right? You find the right deal. You go do all the legwork and research to ensure that, cool, you can do this. this is your goal. How do we help you achieve it? And then connecting them with the right people as well. Mate, just wanted to, we talk about when we engage certain parties, right? So if, let's say I want to buy, or I'm thinking about buying a property. What's your recommendation of when should I engage someone like yourself?
Look, I think there's probably different times that clients will come to us through that process. I mean, I always say the earlier the better through that process. So if you can get more time at the front end of that process where we can sit down and actually develop a strategy around what they're looking to achieve, the better. And, we will actually sit down and work through a lot of that before they engage us through the process. And so the earlier, the better. It could be at the point where they're looking at the finance side of things and getting that sorted. Generally, there's a process, obviously, from the finance side, and it will take a little bit of time. So it works quite well if a client comes to us at that point. They maybe know what their borrowing capacity looks like.
Well, that'd be important for you to know actually what to buy.
From a pricing
That's a
point of view,
blind leading the blind. Yeah, I want a house. So how much can you afford? I don't know.
Yeah, correct. So, I mean, obviously price category is a big one. So they need to know kind of what they're looking for to help guide us around what property they will want to buy. But from that perspective, we can work alongside you as a mortgage broker to start the strategy and work with you on the strategy around how that's going to deliver for them. So
I think communication is quite key as well, and understanding where it is, and the better the communication, the better the outcome, I feel, right?
Yeah, of course. Yeah. And the relationship piece.
Yeah, 100%. So I was about to say that as well.
If you've got the relationship with all of the partners and obviously a good relationship with the client as well, everything's quite smooth.
Yeah.
So when everyone's working cohesively together, especially the key ones of your mortgage broker and your conveyancer and your buyer's agent, things just run really, really smoothly.
Yeah, exactly. Because you've mentioned a couple of times, right? Strategy. You just mentioned it there in that piece there, getting the strategy together. Like I've heard all sorts of things. Yeah, property strategy, X, Y, Z. Mate, do you have? I mean, surely you've got a buying strategy, right? You've said it a couple of times.
Yeah.
Do you want to just tell me, like, in a really high level, right? Just you don't have to get into the details, but what if you're looking at someone like, how do you create a strategy? What key points are you looking at and asking? What sort of questions are you asking a client?
Great lead in, Dion, because for us, it's about the strategy is kind of everything for the business. And that's, again, the reason I started this business was to deliver a better result for a client. And it does all begin with the strategy. And we work with different clients. It's investment. It's also owner occupied as well. So people moving into their own house. And the strategy obviously differs between your investors versus your owner occupied, but it all is based around that. And so the process from our perspective is flipping it on its head a little bit. A lot of other businesses will just go grab a brief and then go out and start, sourcing. Yes. That's not how we do it. So we will sit down and do a really in-depth bespoke strategy up front. And so that's probably our key differentiator in the market is the bespoke nature of it. So it's not a one size fits all. It's not you can plug and play. It's essentially actually sitting down, understanding the client's brief, what their long-term goals are. Again, both investor and owner occupied, they will differ in terms of obviously the approach and the strategy. And then we build out a tailored strategy document specifically for them. And so I tell every client that document is specifically for them, gives us the guide of how we're going to go and find the property for them, clarifies everything on their end as well. And it kind of essentially pulls the process from maybe being a 3, 6, 12-month process down to usually a maximum of 4 to 6 weeks. And that generally gets people into properties quicker, especially in the current market where it's obviously quite challenging and competitive. So
100%. And it also keeps everyone on track.
Correct.
Like what if you ever have, what are we actually doing? We refer back to that document, right? And go, actually, this is your strategy. And if they have any questions, you can sort of clarify it. And and we're here on this point of the journey. That's how I'm reading it.
All the time. And I think you'll see clients potentially starting to waver on that strategy as well, right? And they
As you
go,
do.
oh, maybe we should be looking at this and be like, no, let's bring it back to that strategy document. There's a reason why we've gone, this is what we're looking for. And clients sometimes get a bit worried about where they're heading with it and is it the right mix? And we kind of always step back to that and go back to the strategy because it will deliver for us every single time.
Yeah, no, that's 100%. Like it's sort of like you want to do this, but you don't have a guide on how to do it.
Correct.
You guys are just guiding them on how to do it with some data and referring it back to what do you actually want and where do you want to go?
Yeah, and I think if you don't have that guide, right, like yes, you might find a property, but it may not be the right fit.
Yeah.
Based on the 20 or 30 different boxes that you need to tick, which is obviously what we build out in that strategy document.
Yeah.
And we've got a template that we pull together based on that, but it's all done, tailored specific to the client. So
What you mentioned, like your strategies differ from investment to owner occupied. What are some kind of key differences between an owner occupied strategy versus an investment strategy? Because I would feel that there actually would be quite a massive difference.
Yeah. There is a big difference in terms of how we pull that together, what that looks like. Obviously, investment has a very numbers-driven base to it. Looking at things like, what's going to, and again, depends on the strategy, but it could be a capital growth-based strategy. It could be rental yield. It could be renovation and flip. It could be finding land to then develop. There's a bunch of different strategies from an investment side of things that clients would be looking at. And so we build all of that out. And from an owner-occ side of things, it's more around how they're going to live in the property, what's suitable for them and their family. It could be things like design elements. It could be the house layout. It could be block size and location, school catchments.
Schools,
all that
that'd
kind
be
of
a
stuff,
really
right?
big thing right now, right?
So the strategy is based around that. And so that's more in the, you're going to live in your property. What does it need to do? What boxes does it need to tick for that? Whereas your investment is great. Well, what's your long-term goals in terms of making money, because that's why people invest. And great, we need to tick those boxes based on that. And so in that space as well, it obviously differs very significantly from looking at a capital growth strategy where you purchase and the type of property you purchase versus a rental yield strategy or cash flow strategy that clients will need more cash flow from that side of things. So
Oh, look, I mean, there's lots of, you've thrown out a lot of trigger words
terms,
there, right? Lots of terms, right? So I guess breaking some of those terms down for people that may not quite understand. You've talked about cash flow, you've talked about yield, you've talked about capital growth and things like that. So where we sort of want to head with that, let's get a bit of an understanding of what some of these terms means on a really high level, right? Navigating through some of these terms like cash flow. What does cash flow mean in terms of, I want to buy an investment and we're using a cash flow strategy?
So going back to the start, in terms of why people might actually come to us, as well as a lot of clients come to us and say, all right, we've been told to invest in property, but we don't really know why or what we should be investing in, and they don't understand a lot of these strategic words around things like cash flow, capital growth, all that kind of stuff. So it's about unpacking a lot of that and helping uncover why they want to invest and what they need out of it. So a client, and I'll give an example of a client when we're talking about cash flow. They're at a point where they wanted to get into an investment property. They had equity sitting in their current property that they wanted to use in some way, shape or form in terms of, great, let's pull some of the equity out, use that as part of the deposit to go towards an investment property. But for them, they needed to have a good cash flow strategy because they couldn't afford to be paying too much out of pocket in terms of paying off the investment property. So essentially their brief was, all right, we need a good property that's hopefully going to give us some growth. But the main thing behind it is getting cash flow so that it essentially pays for itself. And the cash flow side of it is obviously the rent coming in from when you rent it out to a tenant. And so, again, going back to that example, we went down the dual key route
Yeah,
for
right,
them, right?
yeah.
Because, and we can explain a dual key as well if you need, but a dual key property is essentially two properties in one, and it is giving you a higher cash flow because you're able to rent it out to two families or two separate tenants. So, that will give you a higher yield. Again, another buzzword, but a higher cash flow coming through, and essentially pretty much cover all of the expenses and repayments and everything associated with that investment property.
Yeah, right. And I guess from a finance point of view, if we've got a bit of cash flow, I mean, usually, obviously seek advice before doing that sort of strategy, but we'd probably be redirecting it to post-tax debt, i.e. your owner-occupied debt that doesn't have any taxable benefits on there, and maximising the tax benefits from your income investment, therefore creating more cash flow at the end when hopefully, touch wood, you get a bit of a tax return buffer, which hopefully you've got a good accountant to do all that sort of stuff with as well.
And it also helps with your borrowing capacity as well, right? So if you getting a strong cash flow property and you can maximize the rent that's coming in, it potentially helps increase your borrowing capacity from a finance perspective.
Yeah, because you're reducing down the actual non-tax deductible debt.
Yeah.
So therefore your actual debt's going down and you're increasing equity.
Yeah.
Therefore you can potentially go again.
Potentially down the track. Yeah. Again,
down the track.
Depending on the client's strategy.
Yeah, depending on the strategy, right? Yeah. Yeah, exactly. You mentioned yield just before.
Yeah.
Real basic calculation of yield. How do you work out the rental yield of a property?
So you essentially take the weekly rent that's coming through on a property, you times that out to a yearly basis, and it's essentially a percentage figure of that yearly rent that's coming through versus the actual cost of the property. And so, if you're looking at, just to give a guide, I suppose, if you're looking at a capital growth strategy where you might pay, let's say 1.2 mil somewhere in inner Brisbane, that might give you better capital growth, you might be looking at a rental yield of, say, 3.5% to 4% potentially. Whereas your dual key type strategies, where you may not get as much capital growth, and you're probably buying a little bit further out, maybe towards, if we're referencing Brisbane specifically, maybe towards Logan, or even looking at Ipswich and those kind of areas, you might be getting, say, you might be purchasing for $750, and you might be getting, say, $850 in rent, and you might be getting 6.5% yield, on properties. So that is it. Essentially, your yearly rent that's coming in as a reflector of how much you're paying for the property. Yeah.
And you just talked about capital growth as well. Yeah. What does capital growth mean? Is that just what the value of the property goes up?
Just getting the value of the property going up, right? So essentially, buying, and where we're currently seeing it in, especially in Queensland, Brisbane with the Olympics and everything coming up, you've got a huge amount of economic development happening, migration coming in, low unemployment at the same time as well, and hopefully we'll see interest rates come down, but I'll refer to you for that.
Fingers crossed.
All of those factors are continuing to drive the price up in and around Brisbane, as well as the fact that there's low supply, high buyer demand. So that's kind of artificially pushing the price up at the same time because there's too many buyers for the amount of properties that are there. So essentially, capital growth is seeing your property continue to grow over the next 5 to 10 years, is if we look at that as a long-term play. Brisbane, or we just bought one out in Toowoomba, we're seeing an average of 10-year growth of probably around 6 to 7% year on year. And so ideally, that's probably not a bad option if you're seeing your price point at $1 million, and then you add 6 to 7% cumulative year on year, then you will see your value of your property artificially grow, which you can then use as equity or whatever you want after that point. So
cool. That's it's a lot. That's a lot of different strategies that we can pull through, right? I guess your job would be to find the balance.
It is finding the balance, and it's about understanding the client at the end of the day. So, again, it's always coming back to the client. Where as a buyer's agent, we're working on their behalf. So it's essentially what they need and what they want to achieve out of investing in property or even purchasing their own property, because I think even if you are purchasing a property to live in, it's still an investment in your future. And so we still always have investment kind of undertones to when we look at those properties. We evaluate it on investment principles as well. But at the end of the day, it comes back to the client, what they need. And we do a lot of in-depth questioning before we start the process to understand that. And that's what builds out the strategy and where we're actually going to go with it.
Yeah, cool.
Yeah.
There's some good information there. I think that's and back to your point, back to our point, I guess earlier as well, is getting in and understanding what your actual strategy is, right? Versus just going in and winging it yourself and going, I'm just going to buy that because my next door neighbor told me. It's like, well, what does your next door neighbor do?
Yeah.
Well, they're actually a plumber. Like, okay, great. They may know a little bit about it because they've got one, but what's the actual plan, right?
Yeah, and what fits for them won't fit necessarily for you, right?
Exactly. And like you said, your strategy papers are actually bespoke to that client and their requirements, their objectives, and ultimately their investment at, over a 10, 20-year period, right?
Correct, yeah. And look, not everyone's going to use a buyer's agent either. There's a lot of people with great knowledge from a property perspective. And I think the thing I'd just tell anyone that's looking to purchase is to step back and really question yourself with some in-depth questioning around what you want to achieve. And that is looking at, great, well, where do we actually want to be in the next 5 to 10 years? And is this next property one that we're going to stay in for the short term? Is it a long-term piece where we want to build a family? So we need, house and land, or it might be short-term interim because you maybe want to build your own place or move to the sunny coast or, whatever you want to do. It's really about questioning that, understanding that, and if you can, even just write it out on a piece of paper so you can build your own strategy from that perspective, and then you've got your own guide, and that will cut the process down again from a 3, 6, 12 month down to 4 to 6 weeks.
I guess from your point of view as well, so if someone has that written down on paper and they're coming to you, it's not as a longer process.
No.
You're just sort of refining it and just asking a few key questions around why.
Yeah.
Why are we doing this? Because it's the same sort of questions I ask when someone goes, I want to buy an investment property. The first question is, okay, great. Tell me why you want to buy it. Well, tell me the motivators and what have you done so far about it?
Yep.
Yeah. So it cuts that piece out, which is good, right?
It is. And I think if a client understands where they want to go and what they want to achieve, it makes that process a lot easier.
Yeah.
But at the same time, there's a lot of people that come to us and just haven't thought about it. And so it is about just sitting down and uncovering a lot of that. But again, that's the job. That's what we do and why. And that's, again, why we do it. Because that's what I love. I actually love uncovering the why for people and then delivering on it.
Yeah, so, cool. Yeah. You obviously do a lot of investment sort of. I think that's really you love the investment part. You're a numbers guy, man. Like you love the things I've learned about you. You like your numbers, your oat lattes, and you're actually good at the old PowerPoint presentation. I can tell you that they're very, very flash, mate. There's a few key things I guess around the investment part, and you touched on it before about. Partners that you have for depreciation. And, a couple of things I'd really love you to touch base on for our listeners is, well, there's depreciation and there's expenses, right? So let's break that down. What is, in a nutshell, depreciation and how does that actually help with an investment strategy?
Before we get to that, I'll just say that, yes, I drink oat lattes or iced lattes, but you did order was it a skim flat white, 3/4 full or I don't know.
Maximum
something
coffee.
Ridiculous. So that's
maximum coffee, minimum milk.
But
if I wanted a milk-based drink, I'd just buy hot chocolate.
I think most people actually drink iced lattes and oat milk's very popular now. Just anyway. I think so. Yeah, from an expenses depreciation side of things, and look, I love both sides, investment and owner occ, but investment, it is numbers driven. I feel like that's I suppose a PowerPoint for me. So I love working with investors from that point of view and actually setting out their goals for the future. And we'll start off by saying this is not tax advice or financial advice in any way, shape or form.
100%. This is not just general advice. People, go to your accountant and see a tax depreciation.
But what we can provide is some information to provide to the accountant around that, right? So we'll do up things like cash flow tables for them that we've developed out that covers essentially any cost or expense that will be incurred for that property. It covers every single line of those, right? And that could be things like your repayments and what you're paying back on the mortgage, which is obviously one of the bigger expenses. But you're looking at things like rates and water, insurance, if you've got body corp, if you're buying into a body corp, which is insanely expensive at the moment.
Far out.
You're paying like over $4,000 for majority of the the body corps in and around Brisbane at the moment. It's
Yeah.
pretty crazy. But it's all of those expenses that you can then essentially claim back at tax time or offset your rent that you're getting. So the income essentially coming through on the property. And so those expenses will obviously offset that. You will then, if it is negatively geared, so if those expenses outweigh the income that's coming through, you can essentially, well, potentially, claim some of that back through your taxation, speak to your accountant. So the other part of that is obviously, as you mentioned, depreciation.
Yeah.
So again, depends on the property.
Yeah.
But you get the most depreciation benefit off a brand new property,
Yes.
which we don't really do. We don't really touch the brand new properties, but we buy existing properties, and generally from an investment perspective, we'll try and aim to buy something as new as possible, so we can try and maximize the amount of depreciation that you can get off the back of that property. Now, depreciation is essentially an artificial thing that the government allows you to essentially depreciate the value on the house, things like, fittings and fixtures in the actual building itself.
Yeah.
And so we work with a couple of different partners, but one main partner that we'll give them a shout out, Duotax. So
give them a shout out.
they're very, very good at maximizing the depreciation on it. So they'll go and run a report and give us an estimate of a yearly amount that you can then put against that, add in as another expense, which then increases your opportunity to potentially claim back at tax time.
Yeah, claim back at tax time, put it on your non-tax deductible debt.
Correct. Yeah.
Pay your home loan off faster,
pay down
right?
home loan, the owner off debt, which is not the bad debt.
Yeah.
And try and just get rid of that as fast as possible.
Yeah.
And then focus on potentially building, on your investments.
Exactly. Again, just general advice, everyone. It's just general advice.
May not fit for you.
Speak to a professional. Yeah, cool. Hey, look, you also touched due diligence and things like that.
Yep.
That I found that very eye-opening that you'd go into so much detail. Do you have an example of where you found the property, you did the due diligence, the client was really happy with the property, and they said, yeah, cool. You did the due diligence and you've actually had to give someone bad news, and how did you go about that?
Look, the biggest thing that comes up, we haven't had one where we've had to crash a contract or anything that, because we generally don't go down that path, because you'll identify that pretty early on when you go and inspect the property. You can notice things like the slab moving or any of those kind of big things that might be structural.
Yep.
So we generally don't get to that point where there's structural issues and you have to kind of crash it, but look, it's happened, in the past. We've seen that happen a lot in previous businesses and things that I've worked in. So, but for us, the biggest thing we see, especially when you're talking about due diligence, is you'll do all that work up front. So you'll generally never get to a point where you've signed a contract and then you go, oh, it's actually in a flood zone, because you've already done that work up front, right? We never get to a point where we get a contract for a client and then you identify something that's not quite right. Apart from maybe something that's uncovered in building a pest. That's probably the biggest thing.
Which is a post-contract thing. It's
post-contract.
You generally do anyway.
You generally have, say, 7 days post-contract to get a building and pest done. We work with an amazing building and pest inspector. We've got a couple, but again, one main one, Resi Cert, Aaron, mate, you're amazing. So anyone that needs a good building and pest inspector, call Aaron. But we work with them on identifying any possible issues with the property. And the big one that we generally see in properties that maybe are 5 years or maybe slightly older is bathrooms, right?
Yeah.
So if the bathrooms haven't been done, there's always moisture, there's always leaking, there's always cracked tiles that need to be redone. It happens all the time.
Yeah.
And so we either negotiate with the sellers to get that fixed up, or maybe a slight reduction on the price so that we can get that fixed up post settlement. So there's things like that. There's things like asbestos sheeting and things that maybe come up that we didn't initially see because it's in a different spot. There's a bunch of different things that come up. Usually they're minor and they can either be fixed or we can maybe negotiate a slight discount to get them fixed. If we haven't notice them at inspection time.
Yeah. Funny that you say bathrooms. I was at a networking meet up last night, and there was a building pest inspector there. Southern Cross building pests. Awesome. Good job. Plug you guys.
Anthony.
Yes, Anthony. Yep, good job. But yeah, he actually mentioned bathrooms was one of the first things that he goes, it's a 5-7 year house. They've done a renovation, but it's not been done properly.
Yep.
So it's great that you can actually pick that up and give that advice. And then again, back to our point before, you can negotiate on the price as well, if it's the right thing, because if it's not, it's hard.
Yeah. And clients don't always want to go and do the work themselves. So some clients go, oh, well, yeah, great. We're going to maybe do some work later down the track anyway. So let's try and see if we can negotiate a bit of a price point, and we can get it fixed up. Others just go, can we get it done beforehand? Because I want to move in. I don't want to have to worry about it. Right. So it just depends on the client and what they want. So
cool.
We're always guided by the client. Dion.
Yeah, exactly. Exactly. Mate, look, amazing bits of information there. Right. But for me, if I'm coming to you, in a nutshell, what I want to know is, if I'm coming to you, what is my process from the moment I contact you to settlement and beyond? Just give us some key, key points, steps and points that you go through.
Yeah. So I suppose, like I said, the first thing is we'll get a brief from the client, and then we'll sit down. So once they engage us, we generally get a brief done before we initially meet with them, but we'll do an obligation-free catch-up initially, chat through what they're looking for, how we can potentially help, obviously uncover some of those pain points that they may have been feeling, and where we can help in those pain points. And so once they go, yep, great, that's what we need. We need that assistance for whatever reason. It could be the time factor. It could be they just don't know what they need to look for. They need the local expertise in the market, all that kind of stuff. But once they engage us, we'll get down to it and actually sit down, do that in-depth questioning and uncover what that strategy looks like, pull the strategy document together, sit down and do a 45-minute or thereabouts catch up, run through that strategy, make any changes that are needed. And from that point, then we will essentially have that guide. Right. So we've got the guide, we know what we can go out and find. And so we then get into the sourcing side of it. And so we'll send the brief out to the agents. I'll be on the phone constantly calling agents and emailing and trying to uncover both off-market, pre-market properties, as well as looking at everything that is on the market.
Yes.
Because again, that's maybe one thing we should touch on is the off-market side of things as well. Because there's a lot of, I suppose, talk about off markets and what that looks like.
We'll circle back to that.
Around that. So we're looking at everything on the market. We'll then create a shortlist for the client of properties that are the right fit and they tick all of the boxes, or at least 8 or 9 out of 10 of the boxes. Once we get the right properties, we'll then go and inspect them. Clients either ask us to do that on their behalf or they come along with us. Obviously, if it's owner occupied, then they'll want to come through the property. They need to see the property and love it. But we'll do all those inspections, and then we'll do all the pricing research, everything in the back end from that side of things, know what the value of the property is, go and put offers in, negotiate with the agent, get a contract signed. Once the contract's signed, we'll work with the brokers on the finance steps, and then get building a pest done, and then essentially go the whole way through to get to uncon. So once it's unconditional, then again, if it's an investment, then we're looking at things like introducing to property managers, getting depreciation reports and that sort of stuff done, and then working with the broker and the conveyancer, because we obviously can connect our clients with great conveyancers as well. Again, fun, 180 conveyancing, amazing. Anyone needs a good conveyancer. And so we work with those guys to then go through all of the steps needed from a legal perspective, all the additional searches that they will run, and then go the whole way through to a settlement, and then get the settlement done with the broker and the conveyancer, and then happy days. Everyone's happy to secure the property.
Sounds like a pretty smooth process, man.
It is smooth when you've got the right team on your side, right? So if you've got a good broker, a good buyer's agent, and a good conveyancer, then the process generally is actually
and obviously smooth. A good buyer's agent, because you need to find the property, right?
Correct. Yeah, of course.
Hey, look, I mean, that's one thing. One thing that we did forget to touch base on is off market. Right now, this is a term that's been flung around quite a bit at the moment. Yeah, we're getting off market. Yep, great, awesome. I had a buyer's agent, I had a client come to me and goes, I'm a buyer's agent, got it off market, looked at the property, it's actually on realestate.com.
Yeah.
And I'm like, well, how's that off market? It's actually on the market.
Yeah.
But what does off market purchasing mean?
So look, the term off market, generally what an off market property or how it's classified as off market should be that it's never going to be listed.
Yeah.
Really. And generally it probably shouldn't be listed with a sales agent at all generally. But if it's definitely not going to be listed on the market at any point, then that's what an off-market classification should be. Majority of those properties should really be classified as pre-markets.
Yeah.
So it's actually getting in beforehand. They haven't listed it yet. It might be on the sales agent's website.
Yep.
A lot of the time they put it onto their own website, but not onto the main portals. So when people talk about off markets, they generally are saying that the property's there, it's potentially going to be sold, but it's not on one of the main portals, which is realestate.com or Domain,
etc. Yeah.
So that's how they kind of classify it. Now, I think the misconception of it is that makes up a big portion of the market, and it's not really the case.
No.
It's only a small subset of properties generally, maybe say 20, 30% maybe of those properties. So the other 70 to 80% is actually they're listed on market. So I always say to clients that, yes, we will uncover as many off markets or pre-markets as possible. They may not tick all the boxes, and you also may not get the best possible deal on those properties because if someone's listing it off market, they will still generally expect you to pay the market value for the property. So you're not going to get a huge discount on it.
No.
Because, and especially in the current market, why would someone sell if they're not going to get a decent price, right?
Yeah.
So, but there's a bunch of different reasons why clients might or sellers might put a property off market first, testing the waters. They may need, say, a slightly longer settlement, for example, because they're purchasing or they're building or something. And so we can access that with the sales agents and the relationships that we've got to uncover some of those off markets. But again, they may not tick all the boxes. So it's about finding the right property, whether it's on or off market, that ticks the boxes for the client.
And I guess if it's off market, you're not really fighting with 50 people going through a open home,
correct? Yeah,
etc. You just it's more individual and tailored, and maybe potentially a better outcome for everyone, sellers, buyers.
Yeah, as long as it's the right property for the client, then it's a really good way of transacting. Because we're transacting directly with the selling agent or the client directly. Seller directly, sorry. And so it does take a lot of that competition out of it. And generally, the sales agents, when they're dealing with the buyer's agent and they're doing a transaction as an off-market property, it is quite smooth because we know the process, we know what boxes we need to tick, we know the due diligence, we know the value of the property generally, and it makes that process quite smooth. But for benefit for the buyer is that they're obviously not in a highly competitive environment where you've got another 20 offers coming through on a property, which at the
multiple
moment,
offers scenario. Here you go, sign this.
Exactly,
Give me a
it's
best
happening
offer.
all the time.
So let's see that on the last contract I had a multiple offers page there as well.
Correct.
Oh man.
And you obviously have to acknowledge that if it's a multiple offer and you kind of get into a blind auction kind of situation essentially, but you can't be going back and forth. So you kind of go in best and final, which is it's difficult for buyers.
It's a silent auction, silent disco.
Almost. It's just that you can't obviously go back and forth. You've essentially got to go in with your best offer, which means that, you haven't really got a negotiation tactic. You've kind of just got to go in and go, great, all right, what's the best possible offer, right? But the last couple that we've done have actually been off market, funnily enough.
Good.
But we've gotten good deals for the client and they've ticked all of the boxes, but we've only gone down that route because they have the right property for the client. So.
Cool. Mate, look, thanks for joining us. It's been really good. Your knowledge, skills, and expertise have given me, I know, I've just improved all my knowledge about what a buyer's agent does and how you go through your process. So I'm sure our listeners will take a few nuggets of gold away.
Hopefully.
Mate, someone wants to get a hold of you. How do they get a hold of the Buyer Squad, Jono?
That's true. Well, they can go to the website, so thebuyersquad.com.au, across to our socials, probably mainly the Instagram account. Again, just the Buyer Squad. Feel informed. Contact us. All my contact details are on there. So shoot us an email or just give me a call and we can have a discussion.
Let's have a chat, right?
Yeah, correct.
Yeah, cool. Look, everyone, I don't have ads or paid advertising on this podcast. all I really ask is if you have learned something from this podcast, share it with your greater network. It doesn't cost you anything. Also, it doesn't cost you anything to follow Jono's page on Instagram at the Buyer Squad.
That'd be great.
My page on Instagram, which is at Dion Finance Specialist, and also the podcast page, which is at Finance This Property That. Don't even know the name of my own podcast. You'll be able to see this whole video on YouTube and also Apple Podcasts. Again, don't forget to head over to the Buyer Squad, give Jono a follow, support small business like we have through this whole podcast. And as always, the information on this podcast is totally general in nature, does not take into consideration any of your current circumstances. Seek professional advice around purchasing a property, finance, accountancy, and conveyancing, and then decide what is right for you. Thank you for joining us today, and hope you got some great nuggets out of today. Thank you. See you on the next episode.